Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have already mentioned in our thumbnail that will the market climb the walls of worry. The momentum was strong. The undertone of the market was bullish, and the primary trend was also bullish. So we had a view of buy on dips last week, but most probably that didn't work out on our expected line. Market saw selling pressure from the day one, and it continued till Friday. And market just tried to witness some sort of pullback on Friday, but again it ended on a negative note on the weekly charts. And also overall, if we see last couple of trading sessions, maybe in last 5 to 7 trading sessions, markets have seen a sharp sell-off from the lifetime highs of maybe 22,750 odd mark till 21,920 or 21,930, which was the swing low of Friday. And after that, market settled down. There was no follow-up selling on Friday. Market remained consolidated. It witnessed some sort of pullback and again ended on a negative note on week basis. So before starting to our video for the next week, a general disclaimer: this video is only for the education purpose. Please consult your financial advisor before investing and trading. Now, friends, now let us go to the Nifty daily charts and we'll try to analyze what is the formation of the charts, and we'll try to figure out what could be the trend for the next week and maybe for a couple of weeks in the foreseeable future. So let us go to the Nifty daily charts. Now this is the Nifty daily charts. You can clearly see uh, on the 5-minute charts. I will just show you that Nifty has been moving in this particular downward falling wedge. On Friday, it opened on a positive note. It rallied and again started corrected, but it managed to defend its Thursday's low, which is a good sign at this juncture. Uh, Now let us go to the daily charts. On the daily charts, you can clearly see Nifty has been maintaining this particular support trend line. You can see this particular support trend line which I am showing. You can see the cursor multiple times, maybe 1, 2, 3, 4, 5, and 6. This is the sixth time Nifty has tested these levels and bounced many of the times from this defending this particular support trend line, and hope so this time also this happens. It defends this level, because since last, if we see December 2023, this support trend line has been managed beautifully, and bulls have always came in to defend this particular support zone. We are, I mean to say, Nifty is just above its 100-day moving average. This is also a positive sign. RSI is slightly negative, but on the daily charts, but on the hourly charts, definitely it might be positive. Yes, definitely it is positive. You can see on the hourly charts, the RSI is positive. It has shown some sort of positive divergence also. So this is also a good signal for the markets. And at least we can see that the follow-up selling has slowed down. It has ended at this juncture. Nifty has formed a harami candle on the daily charts. If we see the combination of Thursday's candle and Friday's candle, it is a harami candle. So it is a one kind of bullish uh, candle on the Japanese candlestick theory. So definitely we might see a technical pullback from these levels. Now the question is whether market has made the bottom. That we will see in the coming days. But I can sense something that looking at this particular past history of last 6 months or 5 months, that this particular trend line has become a savior for the markets, and this time also this might happen. So I feel that markets are just near the bottom. It is in the making of the bottom. I'm not saying that this is the bottom, but it is near around making a bottom, and we might see the start of the next leg of upside rally from these particular region. So at this juncture, I would not suggest any trader to go short. Those who are short should try to book profits, should wait for particular positive triggers to go long if they want for a confirmation. But at this juncture, I would suggest not to go short. Just one should try to figure out positive signs of the market or positive signs on the technical front. So any dips should be used as a buying opportunity, should be the strategy for the next week. Now, friends, let us discuss the important support and resistance level in Nifty for the next week. The first support in the Nifty is placed around 21,932. Below that, the second support is placed around 21,777, which was the previous swing low. And third support is around 21,710. On the upside, the first resistance is around 22,185. Above that, the second resistance is around 22,307, and third resistance is around 22,588. These are the crucial supports and resistance level in Nifty for the next week. Traders should watch out this level. I would suggest to buy on the support region and wait for them pullback. If market closes positive, then carry the position. I would to say try to play for the positional swing on the upside. Now, friends, let us discuss the derivative data of Nifty calls. In Nifty calls, you will see the action was seen in 22,100 calls, 22,200 calls, 22,300 and 22,400 calls, and up to certain level 22,500 calls also. Now here you can see the option premiums are flat. Implied volatility is in a range between 11.73 and 12. There, in some strike prices, there has been a rise in the open interest, rise in the volumes. There has been some shedding in some strike prices also. So most probably the smart money is already thinking of exiting from writing the out of the money calls. Now this is the bullish sign for the markets. Yes, for the time being, we need a confirmation. For that confirmation, we need market or Nifty to close about 22,100 mark. Once Nifty closes about 22,100 mark, then we might see Nifty rallying towards 22,400 to 22,500 in the coming trading sessions. So one needs to be cautious, those who are short and those who wants to take a bullish call after a confirmation should go long after Nifty crosses 22,100 on closing basis. So overall, the data is looking strong. So one needs to avoid going short at this market. Now, friends, let us discuss the Bank Nifty put data. In Bank Nifty put, the action was seen in 22,000 puts, 21,900 puts, 21,800 puts, and 21,700 puts. Now, most probably, if we see 22,000 could act as an immediate support because there is a strong concentration of volume and open interest. There has been a drop in the option premium, which clearly indicating that the smart money has already started writing the puts, and writing put means bullish for the markets. Implied volatility is slightly higher, but it is in a comfort zone. It is between 14.21 and 14.44. But the higher the implied volatility, inputs will bring in the writers of the put, and if the strong money or the smart money starts writing more puts, will propel the market on the upside, will push the market on the upside. So looking at the charts and data, derivative data, the data seems to be positive. And again, I would like to reiterate, any dips should be used as a buying opportunity, and we might be somewhere around the bottom formation. Now, friends, let us discuss the daily charts of the Bank Nifty. So let me go take you to the Bank Nifty daily charts. Now this is the Bank Nifty daily charts. Again, you can clearly see the Bank Nifty has been moving into this particular rising channel. There has been a falling trend line. Bank Nifty was about to break this particular falling trend line on Friday, but it exactly tested those levels and witness some sort of selling pressure at the higher levels. You can let me go to the 15-minute daily chart. You can see this particular trend line which was maintained, but you can also see that Bank Nifty has also taken support around this particular trend line support area, which was maintained since January 2024. Multiple times Bank Nifty has tested these levels, the support trend line, and it has bounced back. So again, at this level we can say that this particular trend line could act as a savior. Again, Bank Nifty is just above its 100-day moving average, multiple support region. So definitely there is some sort of bullish sign at these levels. According to the charts, Bank Nifty has formed a doji kind of formation or an inverted hammer. RSI is slightly negative on the daily charts, but let us go and check out the hourly charts, so which we might get some uh, other signals. On the hourly charts, it is slightly positive. So Bank Nifty needs some sort of upside pullback or an upside spike, which might be seen uh, if we might see a gap up opening on Monday itself. So definitely looking at the charts, the data is showing some sort of strength to emerge at the lower levels because of the multiple support region at these levels. Again, the setup is also oversold, so we might see a counter rally or a bounce back rally, or a bounce, or what we call as a dead cat bounce. And after that dead cat bounce is sustained, then we might see extension of rally or a short covering rally in the coming trading sessions. So overall charts are looking quite good for a bounce back rally from these levels. Now, friends, let us discuss the important supports and resistance level in Bank Nifty. The first support in the Bank Nifty is around 47,200 mark. Below that, the second support is placed around 46,822, and third support is placed around 46,310. Whereas on the upside, the first resistance is around 47,868. I'm sorry that there is some mismatch in this particular. First resistance is around 47,868 is the first resistance in Bank Nifty. Above that, the second resistance is around 48,258. The third resistance is around 48,660 odd mark. So these are the important supports and resistance level in Bank Nifty. Traders should just follow this level, try to buy near the support area and wait for a pullback rally. Or again, I would like to reiterate, one should follow the first half an hour to 45 minutes range breakout on the indices, whether you use in Nifty or Bank Nifty. Mark the highs and lows of first 45 minutes or half an hour, highs and lows in both the indices, and trade the breakouts. If Nifty or Bank Nifty breaks the highs, go long. If it breaks lows, go short. But at this juncture, I would like to reiterate again, wait for the half an hour to 45 minutes upside breakout, because already the markets are into oversold territory. Now, friends, let us discuss the derivative data of Bank Nifty calls. You will see on the screen in Bank Nifty calls, the action was seen in 47,500 calls, 48,000 calls, and 48,500 calls. Now here you can see there has been a significant drop in the option premium. That means still uh, the smart money is into writing the out of the money calls. There has been a rise in the open interest, rise in the volumes. Impact volatility is also rising between 13.62 and 15.19. That is the reason why the smart money is writing the calls, and this is because we have seen a selling pressure in the continuous selling pressure in the Bank Nifty throughout the week and also on Friday. But as I said, the setup is oversold. So once Bank Nifty crosses 47,500 and closes above those levels, we might see a sharp short covering rally towards 48,000 to 48,300 to 48,400 mark, and even 48,500, because here some sort of shedding was also seen. So we might see our market or Bank Nifty is poised for a sharp short covering rally from these levels once it closes above 47,500. Above 47,500, one should not go short, or one should not remain short in the Bank Nifty. Now, friends, let us discuss the Bank Nifty put data. In Bank Nifty puts, the action was seen in 47,300 puts, 47,000 puts, and 46,500 puts. Now, here also you can see there has been a drop in the option premium. That means smart money has started writing the puts and started writing puts. This is the start. So they are looking out for markets or Bank Nifty to get bottom out. Now here the implied volatility is higher than Bank Nifty calls. It is between 15.71 and 16.45. So definitely the smart money is looking out to sell Bank Nifty puts, which will again push Bank Nifty on the upside. It will push the Bank Nifty on the upside. So again, I would like to reiterate, one should avoid going short in Bank Nifty. Those who are short should try to book profits on Monday. Now, the crucial level in Bank Nifty, looking at this particular data, is 47,300. If Bank Nifty closes below 47,300, then we might see some sort of extension of the sell-off. But I don't think so. We might see or we would see a sharp sell-off at this juncture. Once Bank Nifty crosses 47,500, then we might see a sharp rally, which one needs to look into or keep into mind. So definitely Bank Nifty is also oversold. So looking at or combining the all data of Nifty, Bank Nifty charts and derivative data, I would like to reiterate, any dips should be used as a buying opportunity, and markets are well poised for a short covering rally from these levels. So one needs to avoid short at this the market, which I would like to convey in this particular video. Now, friends, the video is already extended below the time, so let us come to the final segment of our show, which is positional call. The positional call, I've identified a stock from the steel sector. The name of the stock is JSWSTEEL. You will see on the charts, JSWSTEEL has been moving into this particular rising channel or rising wedge, whatever we can call. It has taken a support around its 100-day moving average. It has formed what we call as a harami pattern on daily charts, which is a bullish sign. RSI is slightly weak on the daily charts, but on the hourly charts, we can clearly see that it has given a positive crossover. So again, this is a bullish sign for the stock. Definitely, the steel sector has been under uh, the bullish momentum for a very long period of time. So this pullback should be used as a buying opportunity or investment opportunity in the long run. Currently, the stock is quoting around 853. So any dips can be used as a buying opportunity. So henceforth, from these levels, I would, for short-term traders, positional traders, investors, one can buy JSWSTEEL for investment on dips to 840 for an upside target of swing high, which is 914 for short to medium term. Short to medium term is the time period for next 2 to 3 months. So definitely JSWSTEEL is looking good at this juncture. Investors can look out for this stock to invest on dips to 840 for an upside target of 914 in short to medium term, maybe for next 2 to 3 months. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.